Hello guys, how are you? How you guys doing? Market was uptrend pre-market. Um, was up a point, 1%. So we'll see how this could move. I'm sorry, guys. Everything look bullish, so I'm going with bull. Okay. Well, first trade, how much did I make? I don't even know how much I was. I don't even know. Well, let's see. Well, let's talk to the trade, okay? So this went up, come back down, went back up. I mean, look at that. Does it seem like a short? Like, well, it does feel like a short. So, well, depending on how this candle closed, I'll take a short until here. A little bit in the target would have been here. I think the problem I'm having with the Quant Tower is I don't, like when you have put in trade on the Doom, it's supposed to be here, right? But I can't find it here. I don't know how. I think I linked them. It's like green, like yellow, green, purple. Make it purple. I don't even know what is going on, but it just won't show me here. Like, that's a problem. I don't understand what is going on. But if it cannot close like this, I'm shorting here. Possible here. With 5 contract full lot in. But most of my contract would have been just, you know. I can't see the order thing here. That just piss. No, it doesn't piss me off. It's just weird. I should not, like, you know. So we'll see how it's close. A bit close bearish. I'm shorting it down here. How many points do you think that would have been? Oh, we better not just go all the way down there, because give me some points. So 30 points, yeah, possible 30 points. Well, if you count here, 20, yeah, 20. Possible 20 points. So, but I got 1 minute, depending on how close. I really want it close down here. If anything close above, that is not so bearish though. Yeah, I want it close down there. If it close above, as it close above here, it's bullish. Close above down there, it's bearish. So I'm shorting it. I'm going full contract, but like I said, it's depending on the play. You know? And level 2 it is pretty bullish though, so we'll see. It is, yeah. Well, I think this might be a bull, brother. It is bullish. It is very bullish. I can tell, that's for sure. I don't know what it is done. This is a bullish trend. It goes above here, very bullish. I'm looking for a long with 5 contract. Possible here. That wouldn't do. Well, 20, so 30 points. Yeah. This a wiggle? What this? What is this? This is crazy, bro. Yeah. Singly downturn. I don't like that. I don't like this at all. I don't like this at all. I mean, whatever you play, that would have stopped you up. I know, that's for sure. That's a very bearish candle. Man, it tricked you out. You see, like this 3 bar, very great candle. And boom. This is just crazy. Look at, oh my god, it went over the previous low. Man, I would not guess. I mean, I would not know this would have happened. Like, that's for sure. From here to here. Got 2 minutes. I'm not trading. It's crazy, to be honest with you. We just stop like that. That dumb is one of the craziest stuff. How many points do you think that is? 20 points. Oh my god. That seemed like continuation. I mean, if there's a wake off, it could just be pretty much wake now, but it does seem like, yeah. Wait for one moment candle. I know it's pretty bearish, but wait for one candle. And then I'm short. But I don't know, man. I mean, if that big candle or is short, maybe would you think there's a possibility they will go down more or less? We don't know. 40-second, we'll see. Let's go. It definitely bearish because it never like 2-3 candle, bro. Look at these 3 candle, four big candle, eat up one big candle. So yeah, I'm looking for downturn. That's for sure. 4 seconds. I'm a short and 995. I think this is a very good spot to short. Okay, no, is it 96, 95? 96. Five one. Oh my god! Oh shit! Short here. Come on, give me an danger. Okay, entry now. You can go down now. Come on. to them. So I'm just gonna wait for now. Well, I thought it went down, so I shorted 9-0. No, I shorted there, but apparently it would the freak out of me. I should have short somewhere here, 5. So that would have been like 3. That would have been nice. Short. Anyway. Bro, I shorted here. But it went all the way full point, bro. This is just disgusting, Ken. I just want to wig you off. I know I already traded 2 times, but I want an entry here. I entered there. My feel wasn't terrible, so I entered here. It stopped me out because it's back up. Oh shoot. I wonder why. What is it trying to do? Made some money, 1K. That was pretty good. I think that was a good trade. I didn't put stop loss. I let it ride. It was pretty scary. Oh well, you might ask, Tom, are you not that stupid? It was like a little bit, you know? It was a little bit, you know what I'm saying? A little bit. And that would have been still a short of money. Had a lot like a bottoming wicks, which is cool. I want this cannon to close, like it's just bullish, so then I can, play bullish continuation. So yeah. So if it's a bullish candle, we'll green, and then from then on, okay. Okay, definitely look bullish. Huh? But we'll see. We'll let the candle close. But in 3 minutes, very bullish. Yeah. So I might put it in all the way there, but we'll just see. Put gold 1 trillion. 85. A5. How many pigs from A5 to here? 22. 985. 590. 10. 100. So 15, right? 15. 35 pips entry here. So we'll do 35 times 4 is 35 times 4. 35 times 4, 140. So we'll do 1 for 120. So just in case, 130. 130 is good. So 185. Enter here. Bam. So guys, I'll cancel my order. And you guys might say, why? And I will say, because, oh shoot. Yeah, it's working fine. So I'm testing it out. Okay, well, I approximately 1K. Do you think I should stop and then continue with other account? I think I will do that for today. Just stop for today, right? Just stop it out for today. I'll try on another account. So 85828. So run this thing. I'm gonna close this out. So we're going 3. I don't even know what. Did you actually know that, I mean, if I put stop loss here, I mean, it was dangerous, but then I will be stopped out way earlier. Because I know it's a downtrend. Every week, my entry was terrible, but you know. But every week, stop you out. That's why I cancel my stop losses and just put it in. And well, obviously I mental stop, like if anything above, like it went here, but like if it stopped there, I would stop out though. That would be a big loss, but you know. But then like this is beautiful, beautiful, perfect. I mean, this, who would have thought this way? This is so strong, brother. Look at that. Oh my god. That seems a little consolidation down here, huh? Don't you think? Look at that. I'm gonna hit there. Gonna come back down, consolidation. Sort of, not necessarily, but sort of like consolidation down there. So it's already come back down. Is it gonna come all the back down? Oh Jesus, oh Jesus, oh Jesus Christ, oh my God. Okay, bro. What is this? Is it a bearish candle? I don't, bro, I'm so confused on what is going on. Oh, take a position, fine. I'm hoping for a reversal, so 5. And the 5, did it hit 5? No, it didn't hit 5. So you can go 6. 6 here. So 6 here. What I want, I guess my game plan is gonna touch it and gonna work back up. So hopefully touch it and not go through it, work back up. Up. Thank you very much. Thank you very much. Oh, sort of. Yeah, but this changed the game. Well, we just pop, getting smoked, pop, getting smoked. So, well, just shorter too, bro. I'm showing it here. What's it? I'm showing there. Is it just a wig or? Man, come on, touch my me. God, jeez. Oh, it's never touching my stop, bro. It just, man, I'm done with this. Come on, hit my stop, bro. No, hit my position. Why is it dropping terrible, bro? What is going on? This is crazy. This is actually crazy. Oh, shoot. I am loving to chase this meaty picky. I don't want to chase this, man.
Hi everyone, my name is Andrew. As you probably know me from Twitter Space. I've been the banned prop firm trader, and I have Isar here with me, which is...
Yeah, I'm Isar, guys. I'm basically not in the prop firm basically space. I'm more on the corporation side of the world in the finance space. But I've been, keeping an eye on what's going on in the prop firm space, and you have been the next victim, would I say?
Yeah, exactly. So we're here in Bucharest, Romania, for an event that I'm holding. And yeah, the past few weeks have been quite hectic in terms of funding prop firms. The reason for me that I got first into the prop firm space was, as everyone knows, the lower entry level, and that they allow you bigger capital to trade with, instead of Isar who went through the traditional route, let's say.
Yeah, I took the more traditional route. Of course, when I started, sure it's the same for you, prop firm wasn't really a thing back then. So for me to kind of build my career within the finance space, I knew I had to take on some programs to get some credibility and eventually get into the corporation world, to eventually attract investors to be able to manage capital fund. Once I did that, I managed to accumulate my own kind of pot of fund eventually to trade with myself, and now I have my own team who I manage my own fund. And although I have been keeping a close eye on the Twitter space, what's going on with the prop firm space, I've seen a lot of negativity, I must say. That's what it looks like from the outside world. But you were funded, I think you were funded up to 5.5 million.
So my max capital was $5.5 million.
Okay.
With different prop firms, and then one by one started having problems. I think, as we've discussed, prop firm capital is very good once you start. Maybe up to $1 million or $2 million, which is life-changing for someone. Mm-hmm. But for me, I tried to really scale that up, to really use and leverage these prop firms, even if I knew they're running sketchy stuff.
Yeah.
So I knew it's not a long-term gain. I wasn't expecting it to happen that quickly. So my end goal was always to build a track record, go for a private capital. But yeah, since let's say 2 months, when I really started to grow, social media also, I've been targeted by a lot of prop firms. Things like getting funded with, let's say, passing a 500k challenge and then only be allowed to trade 100k, or even not being allowed to trade at all, removing my capital, refunding my fee, and then also threatening to basically lawsuit me if I go public.
How many lawsuits do you
It's
have?
probably 4 right now. 4, and maybe the 5th one is coming soon. Okay. if we get funded. But yeah, what's your opinion on the prop funding versus the longer way?
Well, first of all, I want to clarify one thing, that I see a lot of these prop firms basically preach the fact that they want the best for the traders.
Best.
But in reality, when you just simply look at their rules, what you have to trade within is they try to make it very, very difficult for you to stay in the game for a long time. They say that they want the best, they want to help you, they want you to make money, etc., etc. I think at the start there was a lot of conversation that if you were making money, they were making money too.
That was
basically point. Yeah. But now it's very, very clear that that's not the case anymore. They basically are not in the favor for the traders to make money. So that's the first stigma that I saw in the prop firm space, that they want you to be a good trader, they want you to make money, when in reality they just want you to fail so they can accumulate all these challenge fees together to be able to either pocket it or try to pay out some of the traders, I assume, because I'm sure you have gotten a decent amount of payouts from the firms, but eventually when it becomes a bit too much, you're kind of crossing the line, and
they start looking for dirt on you.
Exactly.
Isn't it funny how after the whole MyForex1 stuff, every prop firm immediately rephrased everything, and from like we give you live capital and you win, we win, to it's all simulated and it's all fake. And
I've seen a lot of things, because there is also a lot of companies moving to Dubai now, especially the ones are in America, United States. It's just a question to me, just wondering, why do you need to move if you're legit? If you have everything under control, you're working under the regulations, why is it necessary for you to move your company right after the incident with MyForex fund? So I don't know, it's a bit fishy, but prop firm space has always been fishy. I mean, you can just look into the case files for
Yeah.
my forex fund, and
Anyone
it
reads
gives
them,
you
yeah.
an insight, because they are one of the big companies, and the fact that they were operating in such manners. What do you think the smaller companies are doing?
It's probably worse. Probably worse.
100%, 100%. They are doing everything possible to make sure that they can not pay out the big
Yeah.
payouts, you know, so they can eventually function and stay afloat, you know, because a lot of new traders maybe fail to recognize that for them to function and operate, they need to be able to keep cash flow coming in via the challenges and the fees. And I think there is a lot of people that claim they are a-booking the traders, but I don't know if that's the case.
I mean, I know of one single prop from that's showed me proof. They're
Okay.
a-booking, me personally. Now for the others, I don't think they're a-booking, no. Because a-booking is very, very difficult, and I don't think it's very worth their
Sure, yeah.
while. It's best to just go through the fees and pay the winning. But yeah, now if you closely watch the prop firm, how it's structured, looks like a casino, right? It looks like a
It
big
is.
casino.
It definitely is. And because the way it's being promoted, I feel like it's attracting the wrong traders and the wrong mentality. Because if I'm a beginner trader and I see you, for example, getting these huge payouts,
Yeah.
I'm like, I want a piece of
want-
the cake, you know, and I want to do the same. And they come with this mentality to either blow the account or just quickly make huge payouts. The risk management goes out the window, you know. And I think that's a problem as well. I feel like there's a lot of issues underlying this prop firm space which needs to be addressed. And there is a lot of darkness that is hidden behind, you know, that needs to be, you know, exposed
But
in a
who's
way.
going to expose that? That's the question. Because the authorities, you see, moving into US,
Mhm.
but that's about it. Like there's UK prop firms, the ones I had issues with, which are registered as software companies.
Yeah.
And they're offering, before they were offering live capital to trade with, Forex, which I think it's illegal, right, based on UK prices. And now they're selling simulated accounts with simulated profits. But how can you be registered as a software company if you're doing
Pre-market
that?
low.
Like, shouldn't that be,
pre-market low?
I don't know, addressed by the authorities?
I think there is
Yeah.
there is a lot of because you need to understand, to be able to operate within the finance industry, especially in the UK, there is a lot of that needs to be regulated under the
Yeah.
FCA, and the FCA is no joke. There is a lot of
I'm pretty sure.
stuff that goes into to be able to operate legitimately within that space. So there is a lot of, I think it's a gray space, you know, because it's quite new as well, you know, the prop firm space, and we're moving in a very rapid pace. I feel like if we just look at the quality of the prop firm space, the targets are coming down.
Yeah.
You know, they're doing now. I think they're doing 100% payouts, which,
Everything to get a customer.
you know, what does that tell you? If the 100% payout is to you, that means they make no money from, of course, you know, the split, right?
Yeah, the
And
split.
that was the main point before at the start. I remember I was looking into it and I was, yes, they are here to basically help you become good traders, and you make money, they make money as well.
Yeah.
And that's not the case anymore. And the targets are becoming ridiculous, you know, everybody's like competing to be
Lower.
the lower, you know,
Yeah.
benchmark setter, which,
It's like any other business, right? You just keep undercutting each other until it all breaks down. But if you look at the first prop firm, which is FTMO,
Mhm.
which started maybe 5 years ago,
Yeah.
was the first one when we basically started. So FTMO back then was only offering 100K accounts
yeah,
for like maybe $600 or something with a profit split of 70%.
okay,
So you were getting 70% after you had 10% first phase, 5% second phase, you had 10 minimum trading days.
yeah,
You had all these rules, but they were not saying you're trading real capital.
yeah,
They were just saying based on your trading performance, you get 70% of the profits.
correct.
So there was nothing, no marketing saying trading a live account or real funds. Not even the MetaTrader account was not real. It was
Yeah.
demo, right?
Yeah.
Saying demo. Even the funding account was demo. And they were very clear about it. And then all these companies started coming in and they were like, no, we're offering live funds. Then they used certain brokers to show live accounts,
Mhm.
right? Even if it's not a live account, it's not connected to live account. And all these things that they keep adding to make it as beautiful as possible, right?
Right,
As-
yeah.
As good as possible. And now if you look back at FTMO, they started slowly to adapt by but they didn't even go that high.
Mm-hmm.
Like they increased it for profit split to 80%, and then that's about it. They only added higher accounts, but they kept the same thing and they're still running. I think they're still the biggest platform, even if I'm banned with them. But yeah, look at platforms now. They come in, it's like 6% for first target, 4% second target, no minimum days, 85 profit split, discount codes after discount codes.
A lot of them, yeah, definitely.
It's sort of like a bubble. Right?
What would you say? Because there's a lot of new traders who want to come in and start trading, and of course they don't have the capital. They don't want to go the longer route, the traditional route. Do you think this space is still there for new beginners?
Yeah, definitely. I think there's some platforms that are still reliable that you can trust. But again, it's different levels, right? If you start to come in and you don't really have any money, yeah, platforms are a good option. But you need to know how to manage them. Because most people, when they see prop firm, they try to go for the highest account. So they have $1,000 in their bank account, they try to purchase the biggest one because that's life changing, right? But maybe instead of purchasing, that's why I say to everyone, instead of purchasing one 100K account with all your money, maybe purchase 4 accounts, 25K each, or maybe 10 accounts, 10K each, and then trade those challenges. And from 5 accounts, maybe you pass. From 4 accounts, maybe you pass 1.
Okay.
But you get that funded account which you can start making money from.
Correct.
Right. So that's the issue, but that's being promoted by the prop firms. You can have up to 600K, up to 1 million, up to 2 million, but that's who doesn't have.
I'm not sure, I haven't looked into it, but does the terms and condition mention that you're allowed to buy 50 accounts, 100 accounts, until if you blow 100 accounts, you're going to get banned? Is
No, it
that
doesn't
such
say
a
that.
thing?
No, there's no consistency rules or anything, because
So
that's what
it's-
consistency, right?
So it's kind of making up on the go.
Yeah, it's making up on the go, because if you buy a lot of challenges and you blow some of them and then you get a live account, you're a risk, right?
Okay.
Because you spent all this money and now you have a chance to recover it.
Okay.
You have a chance to really hit the payout. So it's like a casino, right? You play, you know, like you play, let's say, I don't know, blackjack or something, and you lose, lose, and then when you start to win, they flag you, right? Because that's not okay. You're doing something shady to win.
So it's basically a numbers game.
Yeah, it's a
and
numbers
you're
game,
just-
and they lose. They look at your past performance, say, "Oh, that's what FTMO did to me." They're like, "Oh, in 2021, you blew 4 accounts."
Okay.
Like, what does that have to do with 2023? Right? It's been 2 or 3 years. Maybe my risk management is better. Why are you flagging me based on my past performance? Because that's why they didn't want to give me the live account.
Okay.
Because I risked 2 or 3% during the challenge phase. They say I'm a risk. What am I a risk for? Because I paid for those challenges. If I was to blow them, I don't think there was any risk to that, was it?
Yeah, I mean,
Wouldn't they?
I feel like there is, of course, like I said in the start, it's just like because the prop firms don't want you to make money because they don't want you to have big payouts.
Yeah.
It's basically what their ideal situation would be for a bad trader to come in and just keep on losing challenges upon challenges.
Yeah.
That's how they will make money. And if there is a very small amount of percentage who actually do succeed at making a payout, they're going to pay it out from their pot of fees that they have collected. And I feel like there is a new thing going on. Maybe we don't realize, but in the Twitter space, I keep an eye. I have a very small account on there, but I like to be up to date with everything.
Okay.
There's a lot of traders now becoming like influencers or basically sponsored by
Prop firms.
these prop firms, etc. And I see a lot of people, these same influencers, see the bad things happening and they don't
Yeah.
even say. I mean, at the end of the day, you should be an ambassador. You should be here to basically help all the other traders. You should be, showing the light, and you're not even
swear on you. Like
speaking.
it happened.
And they're not even speaking out, which is sad because you're kind of taking away the fact that you're not going to be helping out the newcomers to show which is a red flag, which company is a bad one, which, showing the way how it's supposed to be.
Yeah.
And I don't know, maybe it's part of the business, they get paid. I'm not sure how
For sure they get paid for affiliation, stuff like that, which is understandable. But again, if you do forced marketing, same as the company, then it's your fault.
Wait for that candle to close, then we will consider.
Please welcome Bill Ackman to the...
Zelensky wanted to meet people from the business community, and there were about 10 of us there. It was organized by JP Morgan, and it was, this is a pretty important person. I think when we look back in time in our history, he's played a very important role in the last couple of years, and it was an opportunity to sort of meet him firsthand. And I think his goal here, I think, was to meet people who could be potential investors in the country, people who could bring business to the country, and I think what he really had to say was, don't wait till after the war. You can really help us by bringing business to our country now.
Also looking for people to help rebuild after the war.
Yeah, I think, look, I'm very bullish on Ukraine post-war, right? I think most Americans wouldn't be able to identify Ukraine on the map circa 2 years ago. And today, I think people know, how many people live there, they know a lot about the population. I think they feel a moral obligation to help. And I think there'll be a very powerful big business case for the rebuilding of the country.
Are you going to commit personally that you'll give money towards the rebuild, either through you personally or the foundation?
So I've invested about $24 million in Ukraine philanthropically during the war.
You already have?
Already have. Some of that was a philanthropic investment in a company called Zipline, which is a really interesting startup. It's well beyond a startup. They apparently raised $400 million at a $4 billion valuation recently. But our philanthropic support was to get them to launch Ukraine. And basically, it's a drone company that ships medical supplies, principally in Africa. But they, places where there isn't good road infrastructure and you need to get blood from one hospital to another, medical supplies or things like that. And they launched they're in the process of launching Ukraine because, of course, the infrastructure of the country is not in a great place, and they have lots of need for blood in the right places, unfortunately.
And that was just the start, it sounds, to more investment from you?
It wasn't really, it was not an investment I was looking for an economic return. It was an investment to, I think it was not in their business plan to launch in Ukraine. And so actually got a call from Mike Moritz of Sequoia saying, look, we're actually looking for philanthropic support to bring Zipline to Ukraine. And I think they are, and actually I had the opportunity to meet the head of logistics for the war at this meeting with Zelensky, and I connected him with the CEO of Zipline because, even in a place like Ukraine, there's a bureaucracy that you need to get through in order to, if you think about launching drones around Ukraine right now, you have to have a lot of confidence that those drones are good drones as opposed to bad ones.
It was a good segue to get to the markets because just within the last week, Jamie Dimon said that geopolitics remain the market's biggest risk. Do you agree?
I think I don't know. Maybe in the very short term that's true. But I think...
Yeah, no trade.
Yeah, it's sort of the unknown. It's the ultimate sort of black swan type risk, right? What do you worry about? You worry about nuclear war. You worry about, an obligation to defend Taiwan. You worry about, war between the U.S. and... We've gone from a period of, a couple decades of, put aside terrorism, which you can't really put aside, but we really haven't had war between major powers, 2 countries in Europe in, 80 years. And so this is not a bright time in our history. But we had a period of time where I think Berlin Wall came down and we thought about peace.
So it's a different environment to be investing in for a number of reasons, which we'll get to. How would you describe what your positioning is today?
So similar to what it's been historically, is we own actually really 8 amazing companies. I'm sure you know most of them. We have a tiny little investment in Fannie Mae and Freddie Mac, which I think together represent maybe a little over 1% of the portfolio. But the rest of those are really options on a ultimate kind of government taking them out of conservatorship. The balance of the portfolio of great businesses we think do well in really any economic, political, or macro environment. And then we opportunistically hedge risks. And the 2 risks we've been concerned about really over the last year and a half, energy prices and kind of the longer part of the curve, the treasury curve becoming, rates moving up.
Betting on the long end of the curve, rates continuing to go up. You nailed that. And you've been making that.
Well, nailed it would be, we put this on like 18 months ago. We haven't made, we actually made almost $3 billion on 2-year rates we've made a relatively modest profit here. So if nailed it, we would have made more. But
Are you
we've
still-
I sort of was quiet
Damn,
about it for a
3
while, and then
billion,
sort of
my
made my point a
God.
couple months ago, and rates have moved a lot since.
Bro,
Is it still
what
on,
the
that bet?
freak?
It is. And how long will it
$3
be?
billion. That is crazy.
Well, until we're right or wrong.
I mean,
guess.
are you still figuring that rates at the long end, the 30-year, for example, or however on the long end, are still going to go higher?
Yes. Look, I think there's, even in the relative short term, there are a number of reasons why rates can move a lot. Among them, right, we have a government shutdown. We're going into what looks like a highly probable government shutdown. We're going to have a data shutdown, right? All these little government agencies that put out data that the Federal Reserve relies on to decide whether to, adjust interest rates, they're going to lose access to that data. So we're going to have this sort of like kind of dark period. We have probably the worst technical environment in our lifetimes for supply of bonds versus buyer bonds, right? We have China selling. We have Russia, to the extent they own U.S. securities and more, selling. We have Saudi Arabia selling. And we have an economy that is still strong and inflation, 3.5%, 4%, and persistent. But, our view is basically you're not being paid enough to enter into a 30-year contract with the U.S. government at a fixed price. 4.7 or wherever it is now. It doesn't make sense in a world where we think structural inflation is north of 3% for the very long term. We went through this very unusual period with extremely low interest rates, where everything just got cheaper. And since the financial crisis, the effort of the Federal Reserve was to make sure we didn't have deflation. The aspirational goal is to get to 2% inflation, and then the pandemic, and trillions of fiscal stimulus, the psychological stimulus of being free to roam after being locked up. All of these factors coming at once kind of lit inflation, and we still have this massive deficit spending. We still have infrastructure spending. The government's selling literally hundreds of billions of dollars of securities, bills, and at some point they're going to have to sell more and more of the longer instruments. And if you look at the balance sheet of the Federal Reserve, it's an imprudent balance sheet. If you think about the United States, right? If this were like a business, you wouldn't have so much short-term. You wouldn't have a third or more of your debt repricing within the next year. So it's not been managed. And I think actually Steve Mnuchin did a good job as Treasury Secretary. The one thing he missed is he should have issued a lot of 30-year, 50-year, 100-year paper at crazy low interest rates, and that's going to be a burden.
Hearing a lot from investors these days. Ken Griffin was on our network within the last week or so. I just had a conversation with Rick Reeder of BlackRock. Those who are talking about the possibility of much higher real rates for much longer than people think, for the very reasons that you're talking about. The issuance is so massive, and where are the buyers going to come from? And the result of that is going to be higher real yields.
I don't know about much higher real rates. I think again, my view is inflation, or kind of the house view is inflation is going to be persistently higher.
Well, you are the house.
But, I guess I control the door on the way in and out, I guess. But, our view is really that we're in a different world. And, the world sort of changes gradually. And you have a generation of people who are used to rates, 4 sounding like a high interest rate. And it's, on a historical basis, it's an extremely low rate of interest. So I would not be shocked to see 30-year rates well into through the 5 barrier.
But
and
then,
you can see 10-year approach.
If I'm work, I wouldn't make any profit.
And that can happen in the very short term.
Ironic.
Like literally weeks. We've seen a huge move in the last number of weeks. And I think a lot of that is investors kind of rethinking. What's interesting about the 30-year Treasury is people reflexively buy it whenever they, because they've made money doing it in advance of a recession. But it's really not an instrument you should use to speculate on the short-term economy. It's a fixed price contract with the U.S. government for 30 years and reflects really structural forces. And I think the structural forces have changed.
You must be negative to the equity market. I mean, how could you have a positive view of stocks if you think that that's the outcome for bonds, yields?
Because if you own high quality, the key is owning businesses that have pricing power. Businesses that can do well in a world of, and by the way, many businesses can do well in a world of 3% inflation. The key is it's hard to manage a business in a world where inflation is volatile, or inflation is 8%, or the kind of crazy numbers. But many businesses can do very well in a world of 3% inflation. And the kind of companies we own, they're very much like royalties. So we own Universal Music, which is a royalty on listening to music. If there's music playing out there, Universal's getting a fraction of a penny for every song that's being streamed. Google's a royalty, if you will, on people advertising, on the web, right, or on YouTube. Restaurant Brands is a royalty on people eating at Burger King or any of their various concepts. Hilton is a continuing, royalty on people staying in hotels and eating and drinking and going to events. The beauty of these kinds of businesses is, actually inflation is ultimately their friend, right? As long as they can keep their costs, as long as their costs don't inflate as quickly as their revenues. And I think the nature of those, so I feel comfortable owning those kinds of businesses, even if inflation remains high. And also, again, historically, if you think about, what is the value of a business? It's the present value of the cash you can take out of it over its life, discounted back at an appropriate interest rate. We were not discounting businesses back using 2% as an appropriate rate of interest. So we've historically, our discount rate we've used, just rough measure is more like 10%, 9%. Numbers which discount the uncertainty in investing in equities.
Nice.
Alphabet is one of your more recent investments, is that correct?
Yeah, we bought it late last year, early this year. Yeah, early this year.
How much did that have to do with AI?
It had a lot to do with AI because AI was the reason why the stock was cheap, right? ChatGPT was launched, incredible, game-changing kind of product, and Google really fumbled their offering. And so people said, oh my God, Google's way behind on AI, and the stock sold off to 15 times earnings for one of the greatest businesses in the world. And we did a fair bit of work, but Google's been almost a decade. They bought DeepMind, huge, spending billions and billions of dollars on AI. It's a company known for hiring great engineers, and you could certainly presume they were at a pretty good place on AI. But they're again very different from a startup. They took a much more cautious launch approach, and then kind of fumbled an early demonstration, made people think they were behind, and Microsoft and ChatGPT would sort of, if you will, OpenAI would eat their lunch, and it led to a very mispriced stock. And then we've bought more in the 120s. It's our second largest investment.
Alphabet.
Yeah.
Some would suggest that, and it was said on this stage earlier today by somebody who sold Alphabet when the ChatGPT and OpenAI thing came out.
So we bought from them, so we should thank them. Yes.
That the ball was fumbled and recovered by the other team who ran for a touchdown and then piled on with other touchdowns. And now Alphabet may not be able to recover the leadership role that it had.
Yeah, I think that's...
DeepMind is a perfect example of Alphabet having this in-house and still fumbling the ball.
I would say they fumbled the PR around the ball, but I think they've subsequently demonstrated publicly that they are integrating AI in all of their various products. Obviously, the most obvious example is search, and they are, I think, their Bard is certainly neck and neck with ChatGPT, and we think they're if you think about the enormous amounts of access to data that they have by virtue of the various everything from search to the various products they offer to their customers, email and otherwise, data and the ability to legally extract and train on data is really important competitive advantage. They also have designed their own chips, access to the cloud, access to the processing power is critical. So they've got many competitive advantages, and I think it's in some ways, in an integrated fashion, that gives them an enormous advantage. They will be a dominant player in AI for the very, very long term, we would expect.
I joked at the outset that we haven't sat together in a while, and we certainly haven't done it here. And one of the last times we did was, Carl comes out, you guys give each other a hug, and it was this big moment. And it's hard to believe for me, and I wonder for you, that it's been 10 years since the Herbalife battle with Carl.
Yeah.
You believe it's been 10 years?
Yes. By the way, had we held our short, we'd be up like 70%. So I'm still psychologically short on that position where we've got a nice profit.
Are you still seeing ghosts at night?
By the way, being psychologically short is a much lower risk way.
Yeah. Are you a changed investor from then? Are you different as an investor than you were 10 years ago? And if so, how?
Of course. I'm a continuous learning machine, and all mistakes are opportunities for learning. And so hopefully, I sort of decided at 50, I was like, okay, I'm not going to make any more mistakes. And I made one. But no, look, we've been very fortunate. We've had the best 5 years in the history of the firm, and we're fortunate in the way that we're structured. You know, I've been a kind of Warren Buffett devotee, unofficial. He's been my unofficial mentor for many years. And if you look at his trajectory, he started out as what today you would call an activist hedge fund manager, running a series of private partnerships. Over time, he took control of what he called a crappy textile company, or probably what was best described as a crappy textile company. But the access to the permanency of that capital gave him the ability to take kind of the very long-term view in a world where people in the investment management business generally have to make short-term decisions because their capital, you know, it can leave. We really 5 years ago got to that place in terms of the structure of our organization, and allows us to take the kind of very long-term view. And you know, we can buy Google at $94 a share when people are scared about and we can own it. And that, I think, is a nice, very fortunate competitive advantage we have.
Are you a better risk manager today than you were before?
I certainly believe so. Well, I mean, look, short selling was never something we actually liked, like shorting stocks, because the asymmetry is in reverse. You know, we're big believers in understanding asymmetry both in life and in investing is critically important, and short selling is on the inverse side of it. So, you know, we did that a couple of times. The first time very profitably, shorting bond insurers and Fannie Freddie going into the financial crisis, and then the famous Herbalife. But since then, all we do is we own really, really great businesses. And if you want to be a successful investor over time and you find a handful of great businesses, doing nothing but owning them is an amazing strategy. And it's underappreciated, if you will, as a successful way to make money.
The moment from you that I said to myself, this looks to me like a different Ackman, was Netflix.
Okay.
Was Netflix.
Okay.
You were a huge believer in Netflix. And I remember the day where that earnings report came out and that stock dropped like a bomb.
Okay.
Right?
Not like
we
a bomb,
spoke. It dropped a lot, okay?
In a meaningful way.
Dropped a lot.
For sure. Yes.
Enough that we spoke, because I went on CNBC and reported our conversation, and you said, that's enough. I was wrong about this. And I said, the old Bill Ackman might have said, no, this is just a moment in time, management team's great, company's great, I'm staying with it. The new Bill Ackman was like, no, I'm done. That's it, I'm moving on.
Because so I still think the management team is great. And I've gotten to know Reed Hastings even more since that time. I think he's a first-class person, and obviously his, Ted and the rest of the team, Spencer, etc. I think it's an amazing company. I think what we misunderstood or misappreciated was, once they announced basically a different strategy, it became a much more disparate outcome. We still thought they would be successful. I wrote a little letter to our investors. We said, look, we think Netflix is going to be a great investment over time. But in terms of, do we want it to be one of 8 things we own or one of 10 things we own? No, because it's kind of the range of outcomes as a result of the sort of change in strategy, going to an advertising model, et cetera, and predicting the probability of the success of that was a different kind of hurdle for us to climb. So it's sort of the facts changed in a meaningful way. It became a different kind of investment. I would have been happy to have that as maybe even a 2.5% position, 3% position in the portfolio, but that's not what we do. We don't collect 30 things. We put 3% of our capital. We own, we have 22%, 25% of our capital in Universal Music. We have 16, 70% of our capital in Google. These are businesses we feel very comfortable. We can sleep at night and have a very high confidence level of what they look like over a long period of time. If a business doesn't meet those threshold characteristics, or something about the business changes where we misunderstood the predictability of the business, we're happy to sell and find something else to do. And basically we took the Netflix losses, but the capital, if you will, and we invested in Google, and it was a good decision. And we were able to make a bigger investment in a company we had more confidence in.
I think part of my point would be, just because you like the management team and you think it's a great company doesn't mean it's a good stock. And you recognized that at a moment where maybe in the past you wouldn't have, because you would have believed in it so much that you wouldn't have sold it when you did. I thought it was a moment. I did.
Okay, I'll take that.
I thought it was risk management like maybe people hadn't seen from you in the past.
Okay.
You don't accept that?
I don't think so. I think it's something we would have done in the past. I think the big difference is, look, we're very happy to buy more of something. Not everything we buy goes straight up, right? In fact, our favorite outcome is the best outcome is we could get our entire position purchased and then it goes straight up. That rarely happens. What normally happens is you buy something, you make it a meaningful position, and then something happens that causes the market to either not like the stock or the market itself goes down, and you can buy a lot more of something you know well at an even more attractive price. And we've done that all the time in our history.
You're pretty
Chipotle being a perfect example. I mean, Chipotle, we bought initially at $400 a share, and then they had a couple more food safety problems, and the stock was $250, right? Which is about the move, almost exactly the move that Netflix made. And then we hired Brian Niccol to be CEO, and we bought more. One of the best investments we've made.
You don't do many interviews. You sure tweet a lot.
No, I don't. Not much.
You tweet a fair amount. You tweeted.
I do that so that to keep you compete with this format.
Well, you give me good material that I can bring up right now.
Okay, good.
Icahn has his problems with Hindenburg report comes out. You tweet, quote, "There's a karmic quality to it. Over his storied career, Icahn has made many enemies. I don't know if he has any real friends. He could use one here." You also likened it to the Archegos debacle, I think we can call it. A little Schadenfreude?
No.
Why did you tweet that? When I saw it, I was like, oh my God, he's poking the bear.
No, look, Carl was not a friendly counterparty when I dealt with him over the course of my life. I did make peace with the guy. He's a charming person to hang out with and have dinner with. But I did not like the way he managed a couple of situations I had business-wise. And so, for Carl to be the subject of a short attack, I did think there was a circle of life kind of quality to it.
You also tweeted, "Transparency is not the friend of IEP."
Yes.
Did you ever go short?
No.
You never shorted IEP?
Never, no. Well,
Did you
again, we don't short stocks anymore.
This might have been a special situation.
No, you know what? You're right, I was short. Psychologically short, that one too. So, by the way, I think we're going to raise a fund of psychological
shorts.
And you can, we'll invite everyone to invest with us.
How do you know when to cover?
How do you know when to cover? When it's asymptotically approaches zero.
You psych out yourself.
Yeah.
So I want to talk politics with you too.
Okay.
Because speaking of Twitter, you become quite passionate about that. In February, you said of Vivek Ramaswamy, quote, "I'm going to make a bold and early call. He will run for president and win." You supporting him now?
I have supported Vivek. I've known him probably 5-6 years. Very talented, very capable, very smart. A little too, maybe more than a little too, to the right for me. I was hoping he would be, as I described, a kind of more center-right candidate. And I think he's got a lot of great ideas, but on some positions, Ukraine and some others, I think I profoundly disagree.
So whereas you said he's young, smart, talented, will attract the center to the right to win, he speaks hard truths, which many believe but fear to say. You no longer believe those things?
I agree with everything that I've said there, except for he was not going to attract the center right. I think the problem is it's hard to win being to the right of President Trump, right? And I think some of his views are to the right of President Trump, and I think I think it's a challenge. I think there are many Republican candidates. I think there are many people that have traditionally voted Republican that would love a centrist, more centered Republican as an alternative, a capable business leader with, I would say, more centrist, more traditional, I would say Reaganite views. And I don't think that candidate has emerged in a way that has created an opportunity to compete with President Trump.
Okay, so it sounds like he's off the check writing list, not getting any more contributions.
We'll see where he goes on his various policies. And I like a number of the candidates. Chris Christie, I've spent some time with recently. I thought he did a great job in the debate. I think he is much more of a, I would say, more traditional Republican candidate. I think he did a great job in New Jersey as governor. He's got a lot of political experience. But, is that someone that the American people will support? I don't know. But I do think we would benefit with a broader array of choices on both sides of the aisle here. Yes.
You tweeted,
which is why I've been supportive of multiple people.
Well, including Robert F. Kennedy Jr.
Yes.
Are you supporting him?
certainly, I like that his voice is in the race, for sure. And meeting him for the first time actually tomorrow.
Have you given him any money yet?
I've written him a check, yes.
So I think some would look at that and say, how could somebody who was so emotional about COVID, you came on my program, we all remember that, as committed as you were to the vaccine and getting as many people vaccinated as possible, given his stance on vaccines in general, some might wonder how you can be supportive.
So actually, I think Kennedy raises a lot of important questions that need to be asked and answered about vaccines. And that's something that we are doing a deep dive on. Just today, I was on the phone with a scientist, and we want to put together what I think needs to be done is a very detailed deep dive into all of the research on vaccines, on vaccine safety, and then among the things we have not done a lot of work on is the cumulative impact on a child, for example, of when I was a child, I got 3 shots. I have a 4-year-old. The schedule is to get 73 shots. And it may not be the virus, if you will, that it's designed to make you immune to a particular disease, or the dead virus, or the mRNA technology. It may be aluminum or some of the other preservatives are used in vaccines, which create risks and challenges. And by the way, as a parent of a 4-year-old, where the 4-year-old has no ability to consent to your injecting something into them, I feel a moral and other paternal obligation to get to the bottom of this issue. I think, I just spoke to a scientist today, top scientist at UCSF, who said to me, Kennedy is right on 75 to 80% of the stuff he says about vaccines. The unfortunate thing is there's a 20 to 25% where unfortunately there's just not enough data for the stuff he says convincingly. So I think it's time for us, this whole vaccine thing became a political issue where, if you got a shot and wore a mask, you were on one party. If you refused to get a shot and didn't wear a mask, you were another political party. It's just not a political issue. And there is real reason. Look, we have a generation of kids who have a lot more asthma, have a lot more eczema, have a lot more autism. And we don't yet understand the reason for that. And is it the adjuvant in the vaccine? Is it something about vaccines? Is it some other toxins in the environment? I think we have an obligation as parents to figure this out before we could keep.
Is that where this newfound curiosity came from you becoming a parent?
No, from actually listening to what Kennedy had to say, as opposed to the biggest, I would say, interesting. I'll give a lot of credit to Elon and Twitter or X, whatever you want to call it. This, I was talking to again a scientist today who's a brilliant, epidemiologist, and among other issues. And he was one of the scientists / doctors that raised questions about our approach to the COVID vaccine. And he was demoted on Twitter. And some of the papers he put up on one of the preprint sites were taken down as misinformation. And you look at this guy, Jay Bhattacharya at Stanford, his recommendations for how we should have managed COVID turned out to be pretty much spot on accurate. But he was basically just, taken off Twitter as misinformation. And now Twitter has become a place where people can express their views. And I'm a huge free speech advocate, and I use Twitter. Look, some of the most profitable investments, one of the most profitable investments I've ever made, I made because of what I learned on Twitter, which was the COVID, the trade we made where we bought CDS. It was clear to me that it was a very high probability event that COVID would be here. We'd have to shut the global economy. And I learned that because I could take a dispassionate view and collect data without it. At least those topics were yet to be screened, if you will. And Elon's basically opened up Twitter now. And the downside to a very open format is there's going to be some hate speech. There's going to be some things that people don't like. The upside is free speech has been a critical, sort of tenet of our country's principles and helps preserve the democracy. So I find that to be a really important vehicle. And on Kennedy, I read the headlines and always had a perception he was a total wacko. And then I spent some time spending, several hours listening to him in a podcast, doing some more work on him as a person. I said, he's raising some really important points on vaccines I hadn't thought about. And so I would say, a year ago, I would have automatically taken a booster. Now I'm going to think about risk and reward, and I don't think it makes sense for me. It may make sense for someone who has health issues, who's older. But vaccines have risk and reward, and you have to do the calculus as to whether the risk justifies the reward. And I really hadn't spent a lot of time thinking about it prior to Kennedy. I give him a lot of credit for that.
January 20th, 25. Who's taking the oath?
I don't know.
Yeah.
I don't know. But I think the logical, it's going to be Trump or Biden, absent someone else credible running for office. And I've done my best to try to convince others to run. I was big advocate for Mr. Diamond, who unfortunately decided not to.
Are you thinking about today what the market impacts are going to be if one of those two
No.
win?
No. I think about the global impact. I think our country deserves a great leader that the entire country can get behind. And imagine what America would be like if you woke up in the morning and the entire country was excited about who was leading the country, right? And therefore we're working together as a country to solve problems, to grow the economy, to protect the world. That's a world we've had in our history. We have not had it recently. And I'd love to see that world come back.
Well, you're a very sought-after speaker because you're not afraid to take on the tough topics, and I appreciate you being here. I know we all do as well. Welcome back to Delivering Alpha. We'll see you hopefully next year.
Thanks so much.
Bill Ackman.
Thank you very much, Bill. It was fascinating. Really good. All right. Cue the bottles. I want to do a deep dive on being psychologically short. That's all I want to say. I think that I could spend a lot of money on therapy if I did that. I think Bill Ackman hit on some very interesting things. I
With NetJets, travel will always be personal, as our standard is not just to meet our definition of perfection, it's to exceed yours.
So let's talk positioning. So 22, tough year for obvious reasons. 23, good year for, in some respects, obvious reasons. But the willingness at the beginning of the year to sort of try and go where the puck was going in your mind and get big again in tech. Now's the hard part, okay? Yes. These stocks have gone up a lot, 40, 50%, in some cases like NVIDIA and Meta, more than 150%. Interest rates are elevated again. NASDAQ's been depressed lately. Where the risks lie now, and how are you thinking about your own positioning relative to that?
Right. Well, I mean, you and I were just talking backstage. I mean, I think about the last 3 years. I feel like I've been through a lot of trauma, starting with the March 26, 2020 episode on Halftime Report. That was the day the market bottomed in 2020. And it was very stressful. And I said, Congress has gone all in, the Fed's gone on all in, we've gone all in. We don't know if it's going to be 3 weeks, 3 months, or 3 years, but we'll get to the other side of COVID. But little did we know that the Fed was going to do something, historic, 0% interest rates, which would cause long duration growth assets to explode higher. Little did we know that the Fed was going to make a pretty grave miscalculation, right? I mean, Neel Kashkari, who was just on the program or just on CNBC yesterday or the day before, right? Headlines all over the place. Go back and go ask your OpenAI about this, but there are headlines everywhere. June of 2021, when the world knew inflation was here, I mean, the cost of a cargo container had gone up by 10x. Okay? He says we're not going to have rate hikes until 2024. That's how wrong the Fed's forecast was in June of 2021, because they were making the argument that inflation was transient. Go back and look at their forecast. So here we are. We've had the most parabolic rate rise in history, right? Obviously caused the convulsions and the trillions in losses that we had in 2022. Putting the economy through that is not a good thing, right? But now they have to slow the economy in order to try to get inflation under control. So I think the risk has increased that the Fed has overshot. We see lots of data points of consumer slowing, whether we're looking at travel demand or we're looking at leisure demand for things like RVs or housing demand. I mean, think about this. We've gone from effectively a 0% interest rate environment in ZIRP, where corporations borrowed for free and consumers borrowed for free, to now we have 8% mortgages, we have 10% car loans, we have 20% credit cards, student loans are about to kick in. The huge bulge of corporate borrowing that occurred at next to nothing April to December 2020 now has to get refied at rates a lot of these companies can't afford. So this is the definition of lag effect and headwinds. And I'm not certain whether we're going to have a hard landing or a soft landing, but I am certain that the probability that we're going to have meaningful slowing in 2024 has gone up.
So have you taken your positioning down?
We've reduced our exposure quite considerably, by at least 50% since the start of the year. So dollars at risk on the long side relative to dollars at risk on the short side are down by at least 50%.
You think the Fed's done raising rates or not? I mean, you already said you think they might have overshot, done too much in too short of a period of time. Are they done?
There's a reason we have sayings like the Fed's caused 10 of the last 7 recessions, or that they operate, they drive the car looking in the rearview mirror. What I'm concerned about, I just listen to their words, like you, and if you just listen to their words, you have to be pretty fearful there's going to be another rate hike. Now, what is the market pricing in? As of this morning, the market was pricing in a 26% chance of another rate hike. So the market's basically saying 75% chance we're not going to see a rate hike before the end of the year. So the market's still calling a bit of the bluff of the Fed, but I think there's a good shot you have one more rate hike because I think they're really committed. He wants to be Volcker. He doesn't want to be remembered as the Fed chair that didn't slay inflation. He doesn't want to see it tick back up. But he also acknowledges that the envelope as the pilot of the economy to stick that landing is very, very narrow. Right? And so what it probably means is that we're going to have more slowing in 2024 than they want. But the reason the market is pricing in 2 or 3 rate cuts next year is because the market is saying the economy is going to be worse than you're currently forecasting. Think about this. The Fed forecast in June of this year for GDP growth for 2024 was 1.1%. Today, the Fed forecast for GDP growth in 2024 is 1.5%. It went up. But those of us living in the real economy, seeing these interest rates, etc., trying to buy a car or a house or an RV, that doesn't add up to me. Something doesn't add up.
They've gotten their economic projections wrong and their inflation projections wrong, which is potential issues.
Hey, babe.
I thought you were making dinner. It's Tuesday?
Better communication? Maybe tomorrow. Tonight, Panera. Solving crunch time and dinner with one easy swipe. That's big. Freshly prepared with clean ingredients. Panera.
After I've showed it to my friends and family, all of a sudden you want to break up. You want my friends to laugh at me. After I bought you a new phone just last week, do you even know how much that phone cost? If it's a joke, just stop it. I don't like playing pranks. So madam, just stop it. If it's a joke, just stop it. Stop it. You are tired. What exactly are you tired of? You are tired of this relationship. After I've showed it to my friends and family, all of a sudden you want to break up. You want my friends to laugh at me. After I bought you a new phone just last
What is up? The gang. I am so lonely. I got nobody. Bro, I guess the thing with trading this type of stuff is like the danger. I don't have stop loss. It's like I mentally have it, but when it come waking up like that, bro, it scared the heck out of you, bro. Ain't no way, bro. No mama, bro. Look at this. Look at this downtrend. This wig, bro. It's just scaring as hell. When it hear it and it come back all the day, bro, I was like freaking out. I was like, oh shoot, here we go again. But okay. A little deep. Fortunately, I'm buying call, so my call might be dead right now. Jesus Christ, oh Lord, help me. I need to get rid of those. Oh Jesus Christ, it's $7. Oh my God. Thank you very much. Yeah. Whew. What's this? Fine. Oh, this pushed it all the way down. Huh. Also shorting it here because initially I guess I was long, and apparently I lost how many count? So 2, 3, 4, 5. So I get approximately 4 count. But whatever. If I make 1, 2, 3, 4, 5. If I in 5 more count, I think I'll be fine. Total 11 count. Yeah. I'm not buying anymore. I want to buy it. I think I should buy it since it's cheap. But I don't know. The goal is to get money pay off first. My plan is to get in October 20th hopefully all of it good. I think top step. Let me look at my top step, bro. Did I do good or terrible? Okay, first. Jesus, the second. Oh my god, I think I need to reset the account. Oh, smoke. Holy smoke. Oh my god, I lost 1K. On my top step, I lost all of it. Okay. Maybe something about me with top step ain't working. I don't know. Should I? I'm not resetting anymore. Top step. I don't know, man. Problem with top step is the consistency thing. Whatever that is trying to smoke on you, like it ain't working. You know what I'm saying? It ain't working. It ain't working. And you wanna turking. That was actually absolute short. I shorted from here, bro. So I shorted one here, and then this wick. Oh my god! And then come this wick, bro. Let me tell this wick, bro. Hey, my emotional is roller coaster. But now you could say I could have held 40 points. I like, dude. Nobody knows what happened in the future. I think today was a good trade. Lost 4 count. And make 2K on 4 count. Was it 4 count? Yeah, 1, 2, 3, 4, 5. Make 2K approximately. Yeah, 2K on 4 count. Only $20 more, so I'm not trading with 5 contract. But it's weird. Is it? I don't know. Just got over a different length. So whatever, approximately $1,000 more. And the consolation downward, so yeah. My calls are down, so.
Hi.